Hello and welcome to Chart of the Day Cafe for Tuesday, January 8th, 2019. Just going to read our disclaimer quickly. Trading stocks has a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Always for your further homework. Good morning, Sue here. Happy New Year, and I hope you had a really great holiday season and are excited to get back to the charts and set up for a very successful 2019. So with that, let's get straight into today's video. If you know me, you know I always start my videos off with a look at the Russell Index, and for that I use the IWM, which is the ETF that represents the Russell 2000, and I like to step back and take a look at things on a 5-year monthly time frame. So here are the big This is the 5-year chart with the big monthly candles. This blue line down here is very, very, very long-term support resistance, and the purple is more short-term. If you remember before the Christmas holidays, we had this purple line up in this area here, but since we blew through it, I'm adjusting my short-term support resistance to this area here where we had some consolidation through the first part of 2017, and then we saw that lift. Really the only indicator on my chart is this blue line, which is the 8-day EMA, which I use as my guide for pretty much everything. I like to see price up and over that 8-day EMA on a daily chart before looking to enter, which you'll understand a little bit later on. So here's that 5-year monthly look. As you can see, the month of December was a really soft month with a lot of selling, but so far for the month of January, it's early in the month, we're getting a candle that would suggest maybe some support coming in here. So time will tell, we will see. I'm going to move it away from the 5-year monthly to the 1-year weekly, and this is where that 8-day EMA comes into play. Ideally for me, I want to see price up and over the 8-day EMA on both the weekly and the daily chart. So I want to see price on the Russell engulf my 8-day EMA as a further reassurance to me that the market is recovering and finding some support. I'm filming this at about 8:20 on Tuesday morning. The futures look to be getting off to a really green start. So I have a chart that I'm going to illustrate for you in a minute. In the event that I only put these videos out every Tuesday and Thursday, so in the event that we do get a good solid next couple of days, it might be one for you to refer to. So again, on the weekly chart, we are below the 8-day EMA, but we have had some really solid price momentum come back into the markets. I'm going to move it away from the weekly to the 6-month daily, and so on the 6-month daily, you can see criteria number 1 for me has been fulfilled, is that the Russell is trading up and over the 8-day EMA. So it bounced off that area of support resistance, consolidated for a while, and is starting to get that lift. So I want to make sure that it stays up and over that 8-day EMA. So with that, I am going to feature a chart that might be of interest to you in the days ahead. And the chart that I wanted to feature for you this morning is Molina Healthcare Inc., ticker symbol MOH, trades on the New York Stock Exchange. This is a US listed stock, of course. For those of you not familiar with Molina Health, it's in the healthcare sector. It's a healthcare insurer. It's one of the bigger ones. You know me at Chart of the Day Cafe. I am all about the scores underneath my charts, and I can tell you that Molina Health has an excellent, excellent, excellent value score with a forecasted earnings growth rate going forward of 37%, a current PE of 12.33, and this one does not pay a dividend. Normally I like to see a dividend payer, but because of the scores and the space that it's in and the chart, I'm featuring Molina Health. So let's get back to the chart. We're looking at the 5-year monthly. You can see support resistance in here with my orange line. This goes back a very long way. There was a huge gap that remained in the chart that was just recently filled. I like the way it consolidated here through 2018 and then had that lift, came back to retest, and looks as though it may want to recapture the blue 8-day EMA. We will see. So that's the 5-year monthly look. Now let's go zoom it into the 1-year weekly. So again, we've got 1, 2, 3 weeks of consolidation around this long-term area of support. You can see the candle that pushed us up and over this area in the past with the volume. So I call this an anchor candle. I use it when I refer to charts as my big reference candle to the overall price structure. So I like the way it's in this area here, it's defending this candle back here. So 1, 2, 3 weeks of consecutive price consolidation, and it looks like there's a little bit of strength coming in here. So I'm going to move it away from the weekly to the 6-month daily. And as you can see, price has moved up and over that 8-day EMA. What I like to see from my trigger is a 3 and 8 EMA cross. I like to keep things super simple, so I want to see the pink move up and over the blue. Oops, sorry about that. When the pink moves up and over the blue like this, and then I just want to make sure that the blue stays below the pink. So we have the emerging 3 and 8 cross. I need to see a little more follow through, so what I will do is monitor this one today and see if we can get another positive candle and more of a cross on those moving averages. Hope that makes sense to you. But I like the volume coming in. The scores are really brilliant. There's a lot to like about this chart for sure. Along with my individual target chart, which is Molina, I like to take a look at the sector that it's in. And because it's a healthcare insurer, we are looking at XLV, which is the ETF for the healthcare space, 5-year monthly chart. You can see on the monthly chart it's been in this gentle uptrend, a little bit flat of late, but like everything else, it had a bad month of December and may want to start finding some support in here. So always a good point of reference to look at the sector that your stock is in as well. Along with that, I like a really excellent site, can't say enough about it. And I want to see if my stock pick has seasonal favor, and sure enough you can see that Molina does have seasonal favor through that first part of the year. As well, I like to spin over to FinViz to see if I've got any recent upgrades for my pick, and sure enough in November of this year we had an upgrade of Molina by Jeffries. Along with that, I'm also going to include this video that I found on CNBC. It talks about the healthcare stocks to watch in 2019. It's a very positive video. It's only a couple of minutes regarding some of the healthcare insurers, in particular Molina Heath. So to quickly recap, I started today's video with a look at the Russell Index, and we note that overall the Russell is not in an uptrend. So I usually, through 2018, this box was pretty much always checked, but because the Russell is still trading below the 8-day EMA on the weekly chart, it's above it on the daily, but not on the weekly, this box is not checked. So it's up to you to decide whether you want to take long trades or not based on that. We looked at the 5-year chart from Molina, and it's at an area of possible price strength and support and continuation, I should say. We looked at the sector that it's in. XLV is the ETF for the healthcare sector, and we note that this healthcare sector looks to be finding a little bit of support here. We'll see in the days ahead. Molina has an excellent, excellent value score. Sometimes I say good or great. It has an excellent value score. It also has an excellent growth score with a forecasted earnings growth rate going forward of 37%. Does not pay a dividend, so this is not checked. It does have that 3 and 8 daily EMA cross that I look for, but it needs more follow through for me. It's got seasonality in its favor, analyst support, a current PE of 12.33, and it looks as though their next earnings are on February 11th. So with that, I'll leave you. Have a great next couple of days, and we will put out a video again on Thursday. Thanks, everybody.